Hello Market Club members everywhere. Adam Hewson here, coming to you from the digital studios of Market Club. Well, it's Friday. We have had quite a week with these big swings in the marketplace, particularly in the gold market. And we'll talk about gold to begin with, and then we'll go on to the equity markets and see what's going on there too. But if you look at gold, you can see that we have had this sort of square box type thing that's been going on for some time. We're getting down towards the lower end of the box. The one thing is concerning is the fact that we have gone below the 50 line on the RSI. That's not necessarily a good sign, but if we clear this off and we put our trade triangles in, you can see that the monthly is still positive. The longer term trend for gold is still positive. However, the intermediate and short term are negative, with the weekly down and the daily down. So the weekly went down at 1335 and the daily went down at 1344. We're currently at 1326 right now. This is the December contract right here. So again, we're at the low end of the base. We are oversold. We're at the low end here and we are oversold. However, we want to give this market some time to get used to a new level and then perhaps to resume its upward trend. But for now, the best place to be is either on the sidelines, and if you're a short-term trader, short, or on the sidelines. If you're a long-term trader, then I would probably hold long gold positions. Looking at crude oil actually gave a signal, a buy signal here today at 48.32. It's 47.50 right now, so you can actually purchase it at a lower price. But these signals we get on the dailies are pretty accurate. Look at this last one here at 44.21, and that exited at 47.35. So that was a $3,000 profit in a matter of days. So again, this is a signal that bears watching. So we're above the 50 line. The trend on the weekly is still positive and the daily is positive, indicating the trend in crude oil in the intermediate term is positive, wants to go higher. This is the Dow 30. You can see we're very close, or actually just below the 50 line, which is not necessarily a good sign. But the weekly and the monthly are still positive, and these are the big ones you want to look at in this particular index. Sort of, again, we're sort of moving sideways, really not too much. We can just put our, like a box around this, and you can see it really hasn't done anything that's dramatic here since, July 25th or even further back, maybe July 18th. So I think we need to just give this market some more time to see what it wants to do. There's an argument, a bullish argument, that people say it's going to go higher, then people say it's going to go lower. So that's giving us this sort of quasi non-trending move, but eventually we'll get into a move either on the upside or the downside, but that's the important thing. But this is the one concern to be a little bit concerned about, and that is below the 50 line. So let's see how we close today. If we close higher, then I think that's maybe that will change the assuage the idea that we're going to go lower. So let's see how that plays out later on today. This is the NASDAQ composite. You can see that we're way above the 50 line, which is a good sign. Still sort of trending higher. The market's pretty flat for the week, but generally speaking, it's still moving higher, still above the 50 line, and our trade triangles, with the exception of the daily, which is not so important, are all positive, the monthly and the weekly. That's what you want to look for in this particular index. So the trend is your friend. We're going to keep on that vein until things change. The weekly turns red. If that's the case, we would exit any positions in this market and be on the sidelines. This is the last market for the day, and the thing that stands out to me here is the closeness of the support, which is right around here. You can see right here around the 50 line. That looks very, very good. And also, if you look at this area here, sort of kind of like a box area. It just kind of really hasn't moved out of that area for quite some time. But generally speaking, if you look at our trade triangles right here, you can see they're still positive, and that's the important thing to look at. You've got a situation where you have the monthly positive and the weekly. Don't pay too much attention. In fact, this one is red right now, so don't pay any attention to this one. But these are the two that you want to look at: the monthly for trend and the weekly for timing. And that's it. So there you have it. They're the markets we're going to cover today. Obviously, we're getting towards the end of summer. This weekend's the last weekend in August, and then once Labor Days are over, then we'll see more liquidity in the market and a more trending type market, and I think it'll be much better for everybody. So let's see how that plays out, but have a great weekend, the last weekend in August. Enjoy. Thanks for watching this video.